Well, let's talk to Danny Blanchflower, former member of the Bank of England's Monetary Policy Committee and Professor of Economics at Dartmouth University in the United States. Danny, help us here as some of your slower students. The ECB raises interest rates again a day after the US Federal Reserve's similar move. So what's next then for both economies?
Well, what we're seeing here is, I call it guessonomics, fingers crossed and hoping economics. I mean, what we've seen are central banks around the globe, particularly the Bank of England, the Fed, the ECB, trying to get out of this low interest rate scenario as inflation starts to rise. They have very little economics to explain to them what's going to happen and whether this soft landing they so much hope for is coming. The worry is that we are steadily approaching the cliff edge. The worry is that, just as we saw in 2008, if you have a global banking crisis, which appears to be what is coming, it's very hard to pull back from that because monetary conditions tighten, lending tightens. I think probably what we've seen in the last couple of months is the equivalent of 150 basis points of tightening. So the big question is, how bad is that going to be? How much impact is that going to have on the real economy? And which bank is next? Just before I came on, I sat and I pulled down all the banks in the United States. And I've got about 25 of them. They're all down, 2.43% for Barclays. UBS down 2%. PacWest down 50% on the day. So the question is, can you get to another day without a bank rescue? And if that was what happens, banks are in trouble. Banks are pulling back on their lending. Essentially what we're going to see, I suspect, is some really bad bits of data. We've seen it bad on the financial side. The problem is going to be in the real economy. And I remember when the ECB raised rates in, I think, 2011 and 13 and had to quickly reverse them. So my suspicion is that data is going to start to look really bad. And as the market thinks in the United States, the next move is going to be cuts. The question is, how big are these cuts going to be and how soon?
You must have some sympathy, though, for those making these decisions on both sides of the Atlantic to somehow get a grip on inflation.
Yeah, I do agree with that. I mean, I think what's most, and obviously the cause of that inflation, a number of things. I mean, it's about the Ukraine war, it's about COVID, it's recovering from the 2008 great crash. In the UK, it's about recovering from Brexit. I have some sympathy, but in some sense, what we're actually seeing is what's called the base effects are starting to drop out. Certainly in the US, we've seen inflation dropping. It's going to drop pretty fast over the next 3 months. I have some sympathy, but the question is, at what point should they have stopped? And what's pretty interesting, actually, is the unanimity that we're seeing. This is a really complex world. I think there are very strong arguments right now to have voted for a very large cut. And if you look at the decision yesterday, unanimous decision again. So it's groupthink. Here we go again. It's all okay to be together and wrong. I think they're going to be severely tested in the next 3 months, and maybe in the next 2 days. What are they going to do about PacWest? You can't fall 50% on a day and then do it the next day and the next day. So the question is, who's next? And how quickly are they going to do handbrake U-turn? And my suspicion is inflation isn't the really big deal. It's going to be recession, global financial crisis, changes in the exchange rate. Those, in a sense, that's the same as happened in 2008. In 2008, central banks wrongly focused on inflation and missed recession. Here we go again.
I'm sure you wouldn't accuse your old friends in the Bank of England of groupthink. What can we expect from them next? What do you think they're going to do?
Well, I think we started to see some dissent at the Bank of England. We've heard these comments by Hugh Pill, the Bank of England chief economist, telling people, bad luck, you just got to get on with it. I mean, and you've got to accept that you're going to be poorer. Well, that's not really gone down terribly well at all. I mean, the other issue is what are firms going to do? There's been a really big rise in firm profits. So maybe what they should have said is, we're all in this together. Maybe what you can see is profit margins, which have risen strongly, but perhaps those can pull back. But in the end, I think what you're going to see is the consumer's going to pull back, banks are going to pull back, and especially small businesses are going to be in trouble. And what's going to happen is these central banks are going to suddenly start to be confronted by really bad data. And obviously the first bit of data is PacWest today? Are they going to get to Sunday? Are we going to be another weekend where the Fed has to step in and rescue them before the markets open in China and Japan and Europe and Australia on Sunday night? Here we go again. So this isn't over. They have no plan whatsoever of getting out of that big stimulus they put in, of putting rates to zero and huge amounts of quantitative easing. So this is guessing and hoping, and sadly the cliff edge approaches.
Come back and see us again soon. Danny Blanchflower, former member of the Bank of England Monetary Policy Committee and Professor of Economics at Dartmouth University in the United States. Thank you very much.
Thank you.